Mr. Sushil Suri, CMD Morepen Lab. Hi, good morning and welcome to the show. Congratulations on delivering a very strong quarter, sir. But could you walk us through the key drivers behind this performance, and which of these do you believe are structural versus one-time numbers? And additionally, is this growth sustainable over the next few quarters?
Yes, thank you. I would say, Nupur and Kavita, that this quarter is very important in two aspects primarily. One, of course, there's a much better operating leverage. So the performance is improved when I say operating leverage, so it's more permanent. So second, of course, is that the existing business, the API business, which was under pressure for last few quarters, this has come up very well. And the structural development is that, yes, the CDMO business, which was I would say icing on the cake, that has started. And now as we see we were expecting the shipments to start in Q2, but the team has done an excellent work. And of course, all the approval from customers have come in time. So we have been able to do the shipment in the Q1 itself. So that's a structural change. If we talk of high level numbers, so the revenue has grown 34%, almost 575 crores. But the throughput is much better. So EBITDA, it has increased 207%. So 34% increase in revenue and more than 200% increase in EBITDA. That itself speaks that the operating margins are much better, efficiencies much better, expenses are covered much better. And the API business has grown 31%. So that also is a big achievement because last year, same quarter, API business was under a lot of pressure. And you would appreciate that this is despite the global disturbance. There are price challenges, there are shipment challenges, there have been cargo disturbances, and all these things taken together. So we have grown 26%. The profitability is much better, and we are prioritizing which customers to feed, which customers not to feed. And the important development is that against the 823 crore EBITDA CDMO order, we have been able to supply at least a part shipment to begin with. So this itself validates that the team is capable, systems are adequate, regulatory approvals are in place. So it is no more a one-time paper order. So now we have gone into the shipment part. Coming specifically to your question, is it a one-time thing? I would say since at least 4 or 5 quarters we have there to complete this order. And typically in this type of business, so most of the time the shipments and order quantities are regular, but of course it's all subject to regulatory approval, subject to our commitments. But we see this business to be on a continuum.
Right, Mr. Suri, now let's touch back upon the CDMO opportunity. Now, how diversified is the current CDMO opportunity pipeline across customers and therapeutic segments? And how do you really plan to reduce dependence on any single client?
I think that's a very important question at this junction. And to be upfront, this single order of 825 crore, of course, shows a dependence on single customers. It is as big as our complete API business in last 40 years. But obviously, the management is working to broad base the customer portfolio and customer pipeline, and otherwise also on the therapeutic class also. This particular product is more on the chronicle side, so that's where the quantities are large and we see regular quantities coming up. But as we go forward, we are working to expand the product base and we are working to expand the customer base also. So typically in these kind of things, it takes 2 to 3 years to develop a customer. So this is a long-term process, but customer concentration would always be, I would say, high in these cases. And unlike our API business, where we are doing transactional business, 1,200 customers, no single customer is more than, say, 20, 30 crores. So here, if we get large customers, even if we get 2, 3 customers, so we are comfortable there. But we are working on it, and it's certainly a risk profile as on today. But going forward, we will be working on it.
Mr. Suri, has the successful commercial execution of your first CDMO project improved customer interest or accelerated discussions with the new global clients?
I would say I can't give you too much information on this platform, but you would appreciate that why we were in, I would say, mad hurry, despite the global disturbance to supply this order. because of these all disturbances only we got into the game. So we had to prove our credibility, and of course we had a credibility on regulatory aspect, we had a credibility on chemistry, but obviously to supply such a large order, we got order in the end of February, rather almost 26th February was our press release. From 28th onward, this West Asia war had started. So all during this war position, we have been able to supply. So obviously there is a customer credential, and we have been dealing with the multinationals and global customers over 90 countries. So we had this credibility in place, but supplying large quantities in a single order was a big challenge because it needs a lot of alignment of machinery, working capital, regulatory thing. So we have been able to, as a prove, and the team has done a wonderful job.
Right, Mr. Suri, so you've been able to manage the risks in that case. But as CDMO scales up, how do you expect the revenue mix between APIs and CDMO to evolve over, say, the medium term?
As we see in the coming 2 to 3 years, CDMO revenue would be more than 50%. And we are seeing it, I would say, by end of this Q4 only, Q3, Q4 only, we will be able to see it. But going forward, we are seeing that API has its own journey. But in API, we are trying to optimize on the profitability part. On CDMO, we are trying to optimize more on the expand customer base, expanding the capacities. So we are expecting that in the medium term, it will become 60%. By Q4, it will be more than 50%. And going forward, maybe if we say project another 1 year, so it can go even up to 75%.
EBITDA margin has crossed 15% this quarter. Which factors are structural versus one-time? And what is the sustainable margin trajectory as CDMO contribution increases?
Here I would say that, like I said earlier, one, of course, is the operating leverage, which is sheer number increase and the volume increase and the better capacity utilization, because expenses are almost stable. So I would say expense increase is, for example, revenue increase is 33%, EBITDA increase is 211%, 210%. That itself speaks that at the same revenue, we are at the same expense, we are doing better job. So second thing which is sustainable is the better product margin, better this product mix in case of API. In the earlier time in API, we had many customers and many market which were very low yielding, I would say, because of the price factors globally and price factor within India also. Now we are trying to optimize the customer basket. We are trying to prioritize our capacities, which customers to offer, which customers not to offer. So that is giving us. And structural change, like we talked, this EBITDA margins in the CDMO business is particularly higher. So the blended EBITDA would always be in the same range, and we expect rather margin profile to improve as we go forward. So, but direction is right. I cannot give you any specific numbers, but we are in the right path. From a historical level, we are much better off.
Now, API profitability has improved due to better product and customer mix. Now, how much additional scope remains for margin expansion through further portfolio optimization and customer mix improvements?
Within API, I would say we are almost on the right corner, but it doesn't mean that there is no improvement possible. But in API, the margins will improve with the new molecules and, of course, with better profitability mix. But major margin improvement will come now from the portfolio mix between API and CDMO. The more CDMO journey comes in, so the more margins will improve. And we are expecting the blended margins profile to be much better.
Many Indian pharma companies are expanding their CDMO capabilities. Now, what differentiates Morepen's offering, and where do you believe you have a sustainable competitive advantage?
That way, I would be very upfront that Morepen had 40 years of regulatory approvals and regulatory, I would say, credibility in our hand, and we have the manufacturing skill in our hand. How we differentiate, one is very clearly on the regulatory front. For example, our facilities have been inspected and approved by US FDA since last 20 years. And in last 4 consecutive inspections, we had nil 483. The FDA has not pointed out any material observation. So that's one milestone. Customers love consistency, and they love quality and adherence. Second point is on the regulatory approvals other than the US FDA. So we have filed DMFs and CEPs all over the world, and in last 25 years we have a track record of nil import warning, no import alert, no red flag, no callback. So we have a great credibility on this quality aspect. Second thing which is there is the ready-made capacity. Most of the CDMO players, so they are work on the research side. So they do not have large ready capacity available. So Morepen has a ready capacity available. Rather, we have realigned our existing portfolio to accommodate the CDMO. Of course, the new capacities are coming up. So this is another advantage. And most important advantage is delivery. So within 3 months, we have been able to deliver the first shipment. So that itself, I would say, from a company point of view, also it's an achievement. And you are seeing the numbers, you are seeing the needle move. That within 1 quarter, we have been able to move the needle.
Mr. Suri, now the last question before we let you go. As you transition from a commodity API player to an innovation-led manufacturing platform, what really are the key milestones or performance indicators, so to say, that investors should be tracking over the next 3 to 5 years?
I would say the first, of course, is clearly the capacity upgrading, because we are now realigning the existing capacity. So capacity, I would say, augmentation is the first thing. Second is building a new portfolio on the CDMO orders, whether in terms of products or customers. And third important is that within CDMO also, presently we are doing small molecules. So from small molecules, we have to graduate to more innovation-led products. So we have already set up a pilot plant for the hypos, which is the high potency APIs. So that will be more of a, I would say, addition to APIs, but we expect some growth on both sides. On the CDMO side, of course, the near-term milestones would be more of customer augmentation, but long-term milestone would be that we enter into the customer requirement, which is more on the roadmap, and that is on the peptides and oligonucleotides. So we have to realign our portfolio mix according to the customer mix. In API, we had a product list and we used to go, I would say, shop to shop, customer to customer, that, okay, this is my list, will you buy? And at what price? Now we need to see and realign our things according to the customer profile. If the market is going towards peptides or nucleotides, we have to realign our capacities and our capabilities according to that.
All right.
Than the numbers.
Absolutely. All right, Mr. Sushil Suri, the CMD of Morepen, thank you very much for joining us on Buy Now, Sell Now.
Thank you.